Happy Wednesday, everyone. Today we are joined by silver market guru David Morgan to unpack the most acute stress the physical silver market has seen in years. A dramatic reversal of metal flows between the world's two dominant hubs, the COMEX in New York and the London vaults. Silver trader Andy Gottlieb recently made headlines explaining that London's free floating stock has been gutted from 305 million ounces down to roughly 125 million by unrelenting demand. That depletion has flipped the transatlantic arbitrage on its head. Spot silver now commands such a premium in London that banks are pulling physical bars straight off of the COMEX shelves and shipping them east, a move that drained 29 million ounces from U.S. vaults in October alone. This was confirmed by CME daily reports. They basically said there has been this steady exodus, but here to break this down is David Morgan. David, that's a lot to unpack, but is that what you're hearing? What I just referenced there, are you seeing this?
Yeah, I'm hearing it on X and maybe LinkedIn as well, but I just want to go through this. Let's break down what we actually know. To start with, no one actually knows the exact amount required by the LBMA to clear the market. And there's lots of moving parts, off-market trades, unreported swaps, and opaque central bank leases. So all that plays into this possibly. So the key signs, first of all, spreads have normalized. So the market's speaking volumes to us. All I have to do is look. We don't have to comment on it. We just need to see reality. So the spreads have normalized. The London-New York arbitrage premium has narrowed sharply from a couple bucks. Last I checked, it was like 7 cents. That's a big differential, Daniela, which means the market is calming substantially.
Okay.
Lease rates have fallen from panic levels earlier back to something closer to normal. And the market has sold off heavily, which is another key sign. Yes, I'll be the first to admit that the silver market is a derivatives market. But behind the derivatives market, there's these 1,000-ounce blocks of silver. They all weigh something different. Very few weigh exactly 1,000 troy ounces. There are usually rough pours somewhere around that. The exact amount of weight is stamped into those bars along with the serial number. So I digress to come back. So the worst of the squeeze appears to be behind us, at least temporarily. So let's give it some more context. The broadcast that you announced or read needs to be framed a little further. Earlier this year, the free-floating silver in London metal available for me delivery was about 305 million ounces. And now, as you said, down to about 125. And the drop reflects several important issues. Number one, India's massive import surge during the Diwali season, solar and industrial drawdowns, especially in Asia, and investors moving to physical allocation during the geopolitical and monetary uncertainty. So the inventory has fallen. It was shipped, as you know, from the LBMA into the COMEX, and there was a condition that required that to fly or boat silver from London to COMEX. Now that's reversed. And the 29 million ounces that you quoted is accurate, and it's been shipped across the Atlantic. But here's the key.
Yeah.
That flow represents the market self-correcting, not a collapse. Arbitrage opportunities triggered by the price spread do exactly what they're supposed to do, and that's move metal from where it is not needed to where it is needed the most. Once that silver lands in London, the spread collapses. And that's precisely what we're seeing right here and right now. Now, the estimates of another 100 million or so to normalize the market could be overstated. Why? London doesn't need to rebuild inventories to that level. It just needs enough liquidity to settle the trades without the premiums exploding. ETFs holdings, central bank leases, and industrial flows constantly recycle metal back and forth into the system. And a more conservative estimate, which I did on my weekly perspective, which I do every week for free at my website, and it's posted on X usually. I said, I saw 3 scenarios. One is 30 million, one is probably 60, 70, and the last one is the 150. And I went through each of those. So a more conservative estimate might be 40 to 50 to 60 million ounces additional to fully stabilize. The big picture is this. The global silver market runs on razor-thin inventories, roughly 3 months of industrial demand or so. Besides the COMEX, Ashanti, which is one of the providers to the COMEX warehouses, has been shipping metal into London. I do not know how much. I couldn't get that data. So there are other sources than the COMEX. So people need to know that. So this underscores what I've said for years. Silver is both a monetary and an industrial metal, and a dual role makes it uniquely sensitive to physical shortages and financial speculation at the same time. And so, yes, the London market is tightened substantially. The spreads are tight, but rates are down. The panic has subsided, at least for now. The underlying issue, a world running short of metal, a system built on paper claims, does remain. It's correcting. So what is the next wave of demand and what stress will return? I'll look you in the eye, Daniela. I don't think this is over, but I think there may be a lesson learned here. And will it surface again or not? I wouldn't say anyone knows for certainty, but based on what I've looked at, no, it looks like it could occur again. Would it occur again to this level? My gut feeling is no. I think that there's enough of a shock to the system that those that are behind the scenes, we might say, probably be a little bit more conservative. And if I was short this market and it's getting near the 50-day moving average and I'm able to cover that short, I would probably be letting out a sigh of relief right now.
Wait, you said a lot of important things right there. What's the lesson learned, David?
Well, the lesson learned is something that I and so many others have said, that there'll be a day of reckoning where the physical market takes control of the paper paradigm. And that's what we've seen this year. We've seen metal that was absolutely required to go from one location to another location in order for the market to clear. Another one is a discrepancy in price. What you see at the SGA, the Shanghai Gold Exchange price versus the London price versus the New York price. Rumors that the Chinese are buying doré at above market. And all these things go into what's called discontinuities. I love big words, but that in a free and fair market, the set price is pretty much across the board. I mean, you don't buy, a certain brand of bread in one store for X and X plus 10% and X plus 20%, depending on where you buy it from. Of course, that's probably not a good analogy, but you get my point, that when you have these dislocations in the market, they are going to rectify themselves. It's called arbitrage, as most of us know. And that is a red flag that says, look, this is no joke. Give me the metal. I need it now.
Whoa, let's stop here for just a moment because this is critical. When the next financial crisis hits, accounts will be locked just like 2008, and it will be too late to do anything about it. I've reported on global markets for over 20 years, and what's happening right now is unlike anything we've faced before. The window to act is closing fast, and the opportunity is now. That's why we've created the Private Wealth Playbook. It's free, and it shows you how to move into the proper gold and silver strategies, proven to protect and grow wealth when everything else breaks down. Don't wait until after the crisis hits. Click below or go to DannyReport.com and download the Private Wealth Playbook right now. Now back to the show. When you said that the silver market runs on razor-thin inventories, did you say 3 months?
Well, I said that. It could be more than that. But
Okay.
you look at what the total hedge position is. Well, right now it is. I mean,
But
I only have to make one data point correct to be correct.
right.
But I should restate that, Danielle, and thanks for pushing back or giving me the opportunity to restate it. It isn't always that tight. But right here and right now, we've actually seen it a couple times. So what I implied was that I think that's the new state of the market, that we will get these episodes where it does get that tight, where we only have a couple, 3 months of inventory to meet the demand. Doesn't mean that we're not mining silver, refining it. The smelters are backed up. They're only taking 999 fines. So it's not like we're out of silver. But, it doesn't matter if it's coming A month from now, if I'm a baker, if I don't have bread to sell to my clients, I'm out of bread. Doesn't mean that, bread factory stopped. It just means there's a supply chain, you might say, problem.
Obviously, I'm stating the obvious, but for people holding paper silver, if there's a run on silver and everyone wants their silver, this is obviously an issue or becomes
Yeah,
an
it is.
issue.
Yeah. So again, I think that, the silver market is the biggest market as far as discrepancy between the amount of paper that's thrown at the market and the amount of physical that exists. No other market in the commodities like cotton or cocoa or soybeans or whatever has that kind of a spread when you've got like 7 months worth of paper to clear the market. But silver's, I should say always, but for a very long time, been like that, which means, in my view, there's just way too much paper relative to the actual physical commodity. And reportedly, the exchange is supposed to kind of look at that stuff, but they seem to turn a blind eye to it.
Yeah.
Gold is like that, but not nearly to the level, and so is the oil. Well, the oil market's
Why do
really,
they turn the blind eye? Because they just keep profiting from it?
I can't give you a why. I have my suspicions. Everyone could come up with their own why. I would I suspect that they've always done it, they meaning the bullion banks primarily, and, because of the idea that, well, nothing's happened yet, why not? And then, of
Right.
course, you drill down, you got a legal expert at commodity law and put them on the stand, they probably have a very convoluted rationale between spreads, contango, interest rates, and all the things they claim to be using. And some of it's valid. I mean, I don't want to invalidate what their argument would be, but it would be really difficult for the jury or the judge even to come to a conclusion based on the price of money, what the 10-year note is, and what the spread is between the May and the December contract. And we actually have the silver here. Well, maybe they have it in the warehouse, but it's also in the SLV as a medallion or vice versa, so it's counted twice. And on it goes. So I don't want to make this convoluted myself, but there is a lot to it. And believe me, when you get into these legal angles on anything financial, it can be an extreme word game that's very, very difficult to unwind.
Um, as we're speaking, gold's getting a major slap in the face, call it whatever you want, colossal downfall. Silver's down. By the time this airs, who knows what will be happening. We're also speaking ahead of the Fed meeting and ahead of the much anticipated China-US talks. Um, what do you make of this shakeout in metals? Do you think, look, we always hear the voices come up, oh, they smacked it down. They smacked it down. Do you think this is just normal, David, or is there something more at play here?
That's a tough one. I mean, it's pretty normal for the silver market. I'm not surprised.
Right.
And I am actually somewhat happy. I mean, that sounds odd maybe for a silver bull to say that, but markets need to consolidate when they need to digest the congestion. This market really kind of went up. This market, meaning gold and silver, platinum, palladium. These markets really took off. I mean, look at what the average gain is during the 11-year period from 2000 to 2011, that 11-year bull market in gold. Every year over year was higher every year. And what the average gain was. These have been extraordinary gains of late. And so it's normal for a market to correct. And it's also normal for it to overshoot. Was that deliberate by, the banksters doing whatever? I don't really know. In a way, I don't really care. I mean, I made my statement many times, but it bears repeating because I'm not sure I've said it on your show. But my take is that the market's long-term trend cannot be manipulated. Just can't. If, you can manipulate the market, gold will be at $252 the ounce. It was in 2000 when the last tick to the downside took place. And here we are, 25 years later, we're sitting at, $4,000 the ounce. However, within that trend, yes, you can play games. Yes, you can manage the price. Yes, you can spoof the market. And that's been proven. I was asked on X to come on board with one of my friends to argue the manipulation idea. And I said, well, let me put it in writing first so it's more clear. And I wrote that the long term trend can't be manipulated, but here are, I think I had like 6 proofs of spoofing, fines, jail time, and everything else that goes into manipulation. Now, again, playing word games, if you go to the legal eagles, they're going to say, well, it's never manipulated. It's not in the court case. Spoofing was involved. Well, let's not play word games. Spoofing is quote unquote management, or if you want to use the word manipulation, I have no problem with that. But again, it can't go on constantly forever. And there's those on the side of the boat that say like it's every day, every tick, it's not. But at times it certainly is to the advantage of the shorts to put massive amounts of paper silver onto the market in what we call the off market or the after hours, where the market's extremely thin, where it's a lot easier to move the market. And this has been done again and again and again. It's been put into the legal system and proven. So I think I've
You're
made my
right.
case.
I think you have made your case. And so much so, I mean, look, you've never left Silver's side. You've even just produced a film called Silver Sunrise that I would like you to talk to us a little bit about and why people need to watch this, David.
Well, thank you for that. Yeah, it was something I was kind of asked, what's your next big, project? You're going to write another book. And it's kind of burnt out of writing books. And it was suggested I do a documentary, never done one. And so the stars aligned, as they say, and kind of met the right people at the right time to push forward. And it's finally completed. It has to do with the stress, control, and fear that money produces. So, my big picture, Danielle, as you well know, you've known me for years, is not only sound money, but an honest system. And we need integrity back in all of our affairs in the human experience. And money is a big part of that because money is what the money masters have control of us. Many of the political class are controlled by money, and many outside the political class are controlled by money. And that's sort of sad, but we all need it. It's important. So I go into that aspect and then I kind of look at the spiritual side of the stress it can produce, and also what the ideas are that would actually, let's say, level the playing field and make a more equitable system for all of us. And that is sound money, but it also revolves around energy. And we touch around about that quite a bit in the film on some hypotheticals that what if energy were free and abundant for all? What would the world look like? So it's obviously very heartfelt. The feedback so far has been very, very positive, not too many that are negative on it. And I left the comments open. I usually don't, but I thought it's good to get feedback because depending on where this goes, I may do a sequel, I may do more interviews about it. I'm not sure.
So folks can check it out at Silver Sunrise TV. I urge everyone to watch it. And I guess just on that note, David, because I think one of the parts that always resonates most with my audience is whenever you share your life advice. So if I were to just ask you to speak to the viewer today, how their life might just change for the better if they wake up to the realization that they can break free from the stress, from the fear, and from the control of money. How can your life change once you understand that?
Well, I think one of the themes in the film is one that I spoke to and others is what the Oracle of Delphi purportedly said, and that's thine own self be true. There's nothing better in our relationships with other than authenticity. In fact, on TikTok and a few other places, I don't get most of my news, folks, from TikTok. Nonetheless, I do get input from a lot of people that know me. And it's a study done on frequencies, and it has to do with the love vibration. And, love is the answer, love is the cure, love conquers all those things that I've heard and perhaps you over the years. And I buy into that. But according to the study, the highest frequency you can have is from you being your authentic self. And
Mm-hmm.
so I think I mentioned in the film, maybe not, but I have mentioned it once or twice before. For me to give the greatest love, and I'm not talking romantic love, I'm talking, love of our brothers and sisters. has to do with you being authentic. So if I'm my true self, to my own self be true, then I can produce the greatest amount of love because there's no interference. It's not I want something from you, I expect something from you, I don't expect anything. I'm giving it freely, completely from the heart, and it'll just go out there and do its thing. So I would say that's probably the biggest message. And keeping it simple. I think our lives have gotten far too complicated. We're staring at these black screens all day long. We're really not connecting anymore. And what the heck are we doing? I mean, we're here for each other. We're here to help each other. We're here to learn from each other. We're here to discover things about each other. We're here to, push the ball forward, meaning not necessarily progress in the sense of having more stuff, but maybe having more humanity.
You're absolutely right. And every time U.S. Thanksgiving comes around, David, I am still haunted by your words. I don't know how many years ago you told me, but you said, put the phones down. That was your advice. Thanksgiving dinner, not just Thanksgiving dinner, but it should be all dinners. Put those phones down because we don't know who will be at that table next year, right?
That's right.
All right. Well, on that somber note, I invite everyone to check out Silver Sunrise. And good for you, David, for stepping out of your comfort zone and producing this film. I hope we'll see more of that creative side from you.
Thank you.
And come back soon. Just always keep us updated on what's going on in the silver front. Thank you, David Morgan of the Morgan Report. And thank you all for watching. As always, I invite you to reach out to my colleagues at ITM Trading in the link below in the description to set up an appointment. It's free, it's educational, and they'll walk you through a strategy based around owning gold and silver. Tell them I sent you. They'll take extra great care of you. We'll see you soon.